Good morning. It's Monday, March 16th, 11:28 a.m. I am recording a podcast here. This is the 19th episode. It's, I was going to walk you outside and look at the weather. I mean, I was hanging out mostly with my 18-year-old daughter yesterday. We were just bumming around. I'm in the height of watching basketball. And, it was 76, you know, Actually, all my family were outside yesterday. People were riding bikes, playing pickleball, tennis. And the reason I wanted to show you outside now is it's super windy. We had, this huge storm rolled through most of the country overnight, but we're here in the Midwest. It is, it's 30 degrees or so, snowing outside right now. This has been typical the last, week or two. We've had just this wild changes in temperature and weather. I've got a friend that it's got a lake house up in Michigan, not quite to the Upper Peninsula, but they were where they were at. They were forecast to get 36 inches of snow, so it's just wild. So that's similar price action that we've seen in the markets too. The volatility day to day is very high. We saw it Friday where the markets opened higher than sold off during the day. And we're seeing the opposite today as I'm recording this. The markets actually have rallied pretty much since futures opened on Sunday night. Oil kind of topped in the middle of the night, maybe made a top earlier, right at the futures open, topped in the middle of the night. It's come down. West Texas Intermediate crude oil's come down, from over 100 to like 95. The move in the Brent oil complex is not as much right now. So it's interesting. There's a discount in between WTIC and then Brent oil. And I saw, speaking of oil, Morgan Stanley's analyst, Martin Ratz, he raised his Q2 oil price forecast to $110 per barrel. That's up from 80. And for Q3, he sees $90 per barrel now. So it's going to be interesting how that plays out because if the strait is unlocked here, it seems like that there could be just a reflexive reaction lower, and we saw that last week when oil peaked at WTIC oil peaked at 118 overnight on Sunday night into Monday morning, and then it came all the way back down to $77 by Tuesday. You really couldn't trade it with options though, futures options, because the volatility is so immense. Even right now, the volatility that's being priced into day to day is very high. So, and right now, I'm focused on oil for a couple of reasons, and we've had a lot of energy exposure. But two, the market is kind of moving inversely with oil right now. So if oil stays high for longer, then it puts pressure on the market. Oil eases off, you get kind of a reflexive bid in the stock market. So digging deeper, I look back to 2008. This was kind of interesting to me. U.S. dry gas output in 2008. Take a guess what that was. I'll give you a few seconds. 1, 2, 3. How many billion cubic feet per day? Okay, it was 56 billion cubic feet per day in 2008. In 2026, we're forecast to average 106. So a very different market. In oil, guess what our production was in 2008? It's like Jeopardy. I'll give you 3 seconds. 1, 2, 3. Guesses, final answers. Well, oil production in 2008 in the U.S. was 5 million barrels per day, and we're forecast to average 13.7 in 2026. So the market is vastly different. The U.S. production is vastly bigger for both oil and natural gas. And, so far we've seen natural gas liquids, and this has helped Antero and some of our Appalachia focus plays like Range Resources too, which we don't talk about very much, but they're liquids heavy as well. Uplifting liquids prices have generally helped U.S. E&Ps. And if you haven't looked at it, look at, about 2 weeks ago, I published, I think it was March 5th, I published the E&P update. I've been doing that almost on an annual basis. It's been pretty helpful, to figure out where the opportunities are in the E&P space. So anyway, that liquids price uplift has helped, but natural gas prices have been relatively pretty dormant. We've had some weather spikes in the winter. I looked over the weekend where, we're going to have a little bit colder weather here the next week or two, but we're going to edge under the 5-year average. And so inventories aren't, they don't stand out either way. But so far you've seen all the price action generally in the liquid space, and although EQT and Expand have done pretty well given what dry gas prices have done. So anyway, that's just I'm lasered in on the oil and gas sector, but it's a different market. Obviously, there's a shortage right now developing because of the blockage. But the U.S. production is vastly different than what it was in 2008, and you are seeing some discounts normalize, for U.S. natural gas and even West Texas Intermediate crude oil versus what the Brent oil price is and than what Asia and European prices are. So that's we're delving in there today. What else was on my mind? There's some stocks that are off a lot here. I talked about Cleveland Cliffs. Steel prices have been rising. LG's a lightning rod, but it's come way in. Steel prices are up $100 a ton from 7 weeks ago. Cleveland Cliffs price was $15 at its high. It's down, in the $8 range. So that's interesting to me. Adobe, ADBE, is one I've been watching. Kind of, we've had our eye on some of the payment stocks and some of the software stocks. I know this doesn't fit neatly into either one of those buckets, but it's cheap. It's got probably a 12 or 13% free cash flow yield is what I modeled. The P's pretty reasonable here, 13 ish PE, and it's down quite a bit year to date over the last year. So that's one. Restoration Hardware is another that has really come in. It's back near its post tariff lows. So, and on an earnings basis, it's the earnings, they've been cut a little bit, but it's held up okay. So I know the housing market's kind of stuck right now. It's a weird dynamic with housing because transaction volume is as low as it was in 0809, which sounds ominous, but then prices are they're pretty much stuck near their highs. I mean, there's been some, obviously in some of the markets like Austin, which, Austin's fairly unique in that the builders have built apartments and housing aggressively there. But, some of the hot markets have come off 20% or so, but on a national basis, we're closer to the highs. And I was actually talking to one of my friends in the housing market. He's in the Philadelphia area. He's trying to buy a house. And he said, there's what housing weakness? Every house I go to buy, there's, it's over the bids. There's 5 bids over the asking price. So I think and Gabriel Gringos talked about this before too, that, the housing market, it's, like the stock market, it's a market of stocks. The housing market, there's a lot of regional markets that have specific dynamics to them. So interesting to watch. I mean, obviously with the new Fed chair coming in, and we have an FOMC meeting upcoming here too, but the new Fed chair will be coming in later this year. The expectation is that they bring rates down from 3.5 to the 2% range, on the short end, and that should bring the long end down too. So we'll see how that plays out. Obviously, with the conflict here as well in the Middle East, but in theory, that would unlock some of the housing market. I'm looking out the window here as I'm talking, and it's just it's literally wind and snow. It's pretty wild. So anyway, that's my update for Monday, March 16th. It's going to, like the weather, it's going to continue to be volatile, and the market is largely moving inversely, the broader equity market, inversely of energy prices. Some like the SanDisk and the memory stocks have been really strong. The AI trade has been strong. We've talked about Circle in the crypto room. Circle's been really strong here. I noticed that was up again today. Just really doesn't pull back right now. So it's definitely a stock picker's market. But the markets are being driven by the price action of oil, and you have to really have kind of a price forecast for that to to get to where you think the stock market will be. So, but what we're seeing too is because there's a lot of hedging, there's a lot of speculation, zero DTE speculation. You get price action one day, like a sell off Friday, and it's oftentimes reversed the next day. So we got a rally today, at least right now. We'll see where today closes. So hopefully you guys have a good Monday, good start to the week. I'm looking forward to spring finally taking hold here in the Indianapolis area. So great weekend for me with college basketball, family, and high school basketball too. I went to some high school basketball games. So I love this time of the year. I'll take a little warmer weather though. So, but I'll live with this. So take care, guys. Bye.